and welcome to this week's Trade of the Week on Monday, the 2nd of September 2024. 3 weeks ago, we went short natural gas futures, and as you can see here on the horizontal line, we did so around 2,240, I believe. And then we had a small move up, but then the natural gas price fell to last week's low. And if you haven't cashed in your profits there, because the low was slightly higher than our take profit area, which was around 2. But we did say that we were going to lower our stop loss to our break even level. So if you didn't get out of that trade with a winning trade, you would have been stopped out here at break even, so without a loss, basically at your entry level. If you haven't placed your stop here, you can still leave it above the high seen at the end of August at 238 and still target the downside target around the psychological 2 level. Now, last week, we did a risky trade and we basically went short Arabica coffee futures. And the reason we did so is because these basically traded around previous highs. And I went short here, as you can see, at around 254.70. And so far, that trade is looking really, really good. I can show you the reason, again, why we went short. We had triple negative divergence. Here, we had the wedge formation forming, triple negative divergence here on the relative strength index. And we were making a high, which was close to the previous high made back in 2022. So all of that led us to believe that there was going to be a reversal to the downside, which is currently taking place. So what you can do now is lower your stop loss from 261 to your entry level and just let it run to our downside target, which is quite a bit lower still. And then this brings me to this week's trade of the week. And what I would like to do is something similar with regards to orange juice futures. You can see here orange juice futures prices having made a new record high last week at 487.93 on the front month futures contract here. And that was marginally higher than the May high. But if you look at the bottom here, the relative strength index, this high was lower than the high made in May. So we've got, again, negative divergence on this chart. And we've had a minor bounce back from Wednesday's low. So therefore, I'd like to go short today, orange juice futures with a stop loss above the previous high and a downside target just above the 400 mark, probably around 410 or so. So this week's trade of the week is to go short orange juice futures with a stop loss above last week's high around 488 with a downside target around 410.